but welcome to Avid Investors Club TV. I'm very grateful that you're here. Hi, Gloria. Welcome. Very grateful that everyone came and is zooming in and trying out the first Avid via Zoom. I will definitely welcome any feedback you have at the end of this to see if we want to continue meeting over Zoom until it's comfortably safe and low risk to meet in person. Still gratitude to Title I for always hosting us when we do want to meet in person. And gratitude goes out to all the members of Avid who've stuck with us, even though we've now not met since February was our last meeting. And thank you to all of those members who've also become clients throughout the course of Avid. That's been fun as well. So, and Melissa, thank you for helping me figure this Zoom thing out for Avid. So what's our mission? Well, we're all still here for the same reasons, to get information and make smarter real estate investments, and to do it together, because success is best when shared. And our goals are the same. Our presenters' goals are the same, to learn from each other and to boost credibility, I suppose, by sharing information that we have. But since we are on Avid TV this month, I'm going to go ahead and try to share my screen and get started with a TV style entry. Wow. Since y'all watch the weather on television, let me say the real estate investing climate in Idaho is hot, hot, hot. We have flaming hot temperatures out there, folks. And if you've been in this real estate market, you probably are aware of that. And even when the weather is steaming hot, it never hurts to always be prepared for sudden changes in weather. So it still makes sense to carry an umbrella or a little bit of extra cash, rainy day cash, just in case it rains. And that's what we're talking about today. And so with this Avid Investors Club, we are going to present an interesting market update, hopefully interesting. We'll talk about how the COVID pandemic has had an impact on the sales market, but so far not the one people have initially expected or feared. And then Melissa Sharone will present live from the First Rate Property Management Conference Room to divulge the must-know info on the rental market and what the heck is going on in that situation in a global pandemic. As we meet and get together and think about real estate, I would suggest some things to consideration or keep in the back of your mind is, what is your crystal ball take on the market? What do you think? What's your gut tell you is happening? Since all the rules have been off and shifted, that's something that I've been asking my clients. I can tell you what the data says, but the data in the market has been, it always lags behind anyway. And so it's presenting a picture of last month at the most recent. And so I think it's important to consider where you stand personally on the future in that crystal ball. And so far in the poll, it seems like there's it's a very small poll, but a decent bit of optimism in the market. We had mostly optimism and a couple pessimistic views on what's to come. If feeling pessimistic, selling makes sense. The market's high. It's been high for a very long time. Nothing lasts forever. And if pessimistic, cash seems to be a good thing to have on hand. If buying, adding a stress test to your purchases by way of changing vacancy makes sense, or even putting more cash down, anything cash flows with 100% down if there's any income. And so that could help endure a pessimistic outlook. In the Great Recession, we saw some rents decrease about 15%. And then if you're feeling opportunistic, well, it's still a decent time to sell. It's a seller's market. And if you're feeling optimistic, accumulation and with intentions to buy and hold is something you can do as well if you can find the property to purchase. And again, we still recommend greater cash down just because of what our market's presenting in terms of opportunities and cap rates, which we'll go into. Also, as taking a moment here to really reflect on what you're doing in real estate, thinking of where you are in the investing cycle makes sense since we are amidst change, but also anytime. If you're early on, you probably have more risk tolerance. And that may be something you apply in different ways in this market. Wholesalers are still reaching out and bird dogging properties and finding opportunities out there. Returns have been scrunched since we last met. If you're into investing, maybe that means you have something to sell, and it's a time to ask yourself, okay, do I want to hold for this cycle, whatever it is? Maybe it continues steeply inclining. Not inclining doesn't mean decreasing. It can also level off. And so far, with the amount of folks moving here, we haven't gotten any indications that there's a sudden pop looming in the near future. And that's not what the economists are saying either. And if you're further down the line in your investing cycle, then some things to consider are refinancing if you haven't already. That's another way to boost your cash flow. Interest rates are really low. And an interesting take on refinancing at this time is the cash out refi. Your interest rate isn't quite as compelling, but it costs money to refinance a property. And you can refinance one and change your interest rate on multiple properties by doing a cash out refi. So that's one strategy that we are considering is taking a bunch of money out of one property, but then paying off a high interest loan. And so in doing so, we get two interest rates reduced. And that's an opportunity if you've got properties and equity built up. To give you an interesting snapshot of what we've been seeing, here's the same listing, the same new development in Eagle of fourplexes. The first one, the listing was in June of 2019. The second one, March of 2020, and the third one, May of 2020. And you can see what price that property was listed at when it went pending. And so we went from 650, 675, and then 725 in May. So for these properties that are being built, the prices have increased significantly over time. For haves, wants, and coming soons, which we talk about sometime, I have only one listing to share, an upcoming listing at 501 Hayes. It's a historic part of town, an 8-plex that'll probably list for about 1.2 million, which is going to put it between a 4.7 and a 5.2 cap rate, depending on whether you're looking at actual or market rents. I've seen similar properties in similar part of town get bid up at that price. It's TBD what will happen with this one, but it is going to hit the market. And if you ever want to see a pro forma on it coming soon, just let me know. In terms of the duplex and fourplex trends, inventory is a word that we've been saying a long time. And last year when we were talking about inventory being stifled, this year it's just even more so. It dropped from 11 to 6 units. This is data from just last month. Now there were some new build fourplexes that went straight to pending. And when you see more sales than inventory, that's how that happens, either going straight to pending or just depending on when you take your snapshot of active listing data. So pending deals rose from 27 to 46 if you include those new builds. And Ada County fourplexes jumped up to 18 in October, which was up 6 pending from 6 pending, up 6 pendings from the previous month. Sales were steady at 21 overall, with Ada County duplexes being 11 of those, and absorption dropped with there's just not much inventory coming online. So we're at 1 month's inventory across the board. 3 to 6 months would be considered a balanced inventory. And here's a snapshot of active listings in duplex and fourplexes in both Ada and Canyon County. We can see how it's played out. In March 31st, 2020, we have a big spike there. And that's about when everyone was holding their breath going, okay, there's COVID. What's happening with that? And maybe for a minute, there were some extra opportunities for buyers as everyone was holding their breath to wait and see what was going to happen. And then it seemed as though immediately following, a lot of people held their inventory from the market. and didn't list because they didn't want to list at the start of a pandemic coming to Idaho. And that inventory delay is something we've been, experiencing the fallout from. We did not have that ramping up of spring pricing. Instead, everything stopped. I noticed that CBH didn't list any new build homes for a couple months in that time. And with that holdback, I've experienced some, and I'm probably jumping ahead by sharing this now, but I've experienced some appraisal issues where the market is ready to pay more, the prices are higher, but because we just didn't have that ramp up of sales data to present sold comps at an inclining price, it's just trying to jump ahead faster than some appraised values can keep up with it. Now on these Ada County fourplex trends, what's really interesting. So Tony Dross tracks this data. Tony's the founder of First Rate Property Management and also has Boise Investment Properties, which is a team within Swope. And he's been tracking this data forever. And having taken a hiatus from Avid and going back and looking at the February presentation and then plugging in the data that we have now, which is from October, and February's data would have been from January, to look at the changes was very interesting. And so days on market in Ada County fourplexes has actually gone up right now. It's up from 6 to 20, but the average price was around $602,000 last time we met as a group, and it's up to $660,000 now. The gross rent multiplier is, here you see we're at 166. And again, the lower this number, the better for buyers. We were at 151 when we were looking at January's data. And the 6-month trailing gross rent multiplier is 160. So that's not a number we've seen before for a 6-month trailing data on gross rent multiplier. And what that means is if you wanted to do a quick down and dirty valuation and you felt like your property was going to be right around the average gross rent multiplier, you would take your monthly rents and times it by 160. Similarly, that means that a $700,000 fourplex is probably bringing in about $4,375 a month in rent to hit that 160 number. Now, cap rates, back when we met before, the recent cap rate in January was 4.79%, and now it's down to 4.65%. And the 6-month trailing went from 5.08 to 4.81. And the price per unit that we were at back when we last met was around 150 per door. And now we're closer to 165 per door. So that low inventory and that high demand has really just kept the investment dollars flowing in and driven our returns down a bit, which is, I guess, part of the reason to put extra cash into your deals if you're purchasing right now. Mm-hmm. And this is a snapshot of what's actually on the market right now in 2 to 4 units in Ada County. This is today. So those little down arrows show that we did have a couple prices go down. They've had higher days on market. Well, this Dill duplex at $515,000 has 60 days on market almost and had a recent price decrease. And then this Malad triplex, triplexes are kind of the redheaded stepchild of properties. They don't know exactly where they fit. They don't necessarily follow the trends of duplexes or fourplexes very well. Anyway, it's a funky property, and that one had a price decrease after only 2 weeks. So this doesn't look like a shortage of inventory, but only 5 of these have less than 2 months on market. So some of the properties that are up there are either priced high or they're not flying off the shelf despite the high demand that we're talking about. Mm-hmm. When you look at the Camden County active listings, 2 to 4 units, we see that there's only a handful, and right now their prices look a little bit more compelling. I mean, I think the best property on this list is that Middleton duplex. I usually don't typically find myself paying a whole heck of a lot of attention to places like Middleton or Cuna, but everybody's kind of, when looking for the market for people, you're kind of going, well, where can I find something? Let me check these other markets out. And that Middleton duplex is actually quite new in age. So that's what I like about it. The fact that it's, right around 150 per door. I would expect it to be lower per door than average if it's out in Middleton, but the fact that it's also newer in age, I thought that was a positive point. It just depends how much optimism you want to apply when looking at properties, because you can buy them in a market that requires optimism. But what if you're going to sell in a market that doesn't have this level of demand? You want to make sure you buy something that you're going to be able to move down the road. And so applying, different lines of thinking can help with that. And then, of course, also just choosing when you sell, and selling in a market like this is important. And sometimes that requires being a contrarian. So 5+ units, not a whole heck of a lot out there, but actually more than we sometimes see. This is always a brief data point, and a lot of it's developments, larger developments at a higher price point. This one's really interesting in just the rarity of it. It's 5 fairly large condominium units in one 80s built building that could use a paint job that's about 3 stories tall. And so it's a building with a bunch of condos, and condos can be tricky to get financing on. So what this investor's done is accumulated 5. Now he has a majority hold in the HOA that is comprised of about 9 units, I think. And instead of selling them individually, is trying to sell them as 5 units, and maybe that would qualify for commercial financing. With condos, they're tricky to buy. I don't usually watch that market for investors, because if you're just trying to sell them off individually, Fannie Mae or Freddie Mac are going to look at how many of the units are rentals, and you could run into financing challenges depending on the answers there. And we already know 5 of those are rentals. But the price per unit is great. But then I just catch myself wondering if I'm applying too much optimism on a funky property. The single family home market has been a trip. It has been a crazy ride since COVID hit. We are now topping a $400,000 median price of homes in Ada County. Can you believe that? We were talking about it being a record at 363,000 when we last met, and now we're above $400,000. It was the increasing share of new build homes has really helped to drive that price up. Also, the lack of supply, of course. So I've started breaking it down and looking at what's the difference between new construction and then existing homes, the median price. And in new construction, we've got a $438,000 median price and a 70% year-over-year decrease in inventory. It didn't help that our biggest builder, CBH, withheld properties from the market for a couple months while waiting to see what happened with COVID. And that has been an area I've been watching for investors, because if your multifamily returns start to shrink, then why not look at single family homes where you have only one tenant to deal with, they pay all the utilities, it's just an easier property. And if it's brand new, you're helping bring inventory to the market. You can afford to put some new blinds in it. Somebody else might not be able to afford those initial startup costs that CBH does not include. They don't include blinds, they don't include fencing, they don't include a fridge or washer and dryer. You might not include either. But there's a few, and they don't include back landscape or back sprinklers. So there's some startup costs there on top of down payments that just make new construction a different market. But $438,000 median price. I was looking for I was looking for anything to show an out-of-state investor who came into town to check out Boise, and it was crazy. I looked at whatever was available below 400,000. And I didn't want to meet at a restaurant due to COVID. So we met at a plot of dirt on State Street near the Idaho Central, just west of downtown. I didn't know how far in development it would be, but it was dirt. So that's where we elbow bumped or whatever we did and met. And then we went to a new townhome in Garden City that had a view of some, like literally the balcony overlooked some mobile home park, but it was very entry-level construction, and it was just what was available active. And then we did go over to 10 Mile and look at the only CBH home available for less than $400,000 off the 10 Mile interchange. And so, yeah, that new construction has really made a difference in our market, but still the existing homes are at 395,000 with a 78% decrease in inventory and only 13 days on market. There was precisely one existing construction home for us to look at on that buyer tour that day. We looked at it, and in the end, paying whatever that price was going to be for something that was 20 years old and might have a bunch of components at the end of its usable life, just made us look closer toward that CBH purchase, even though I had just sold CBH homes to investors in that same neighborhood for $60,000 less. Wow. And with that, now we are bumping into an appraisal issue. And as a good agent, I'm celebrating that. I'm glad we're hitting an appraisal issue, because if we're not going to appraise, we're going to use that and leverage that to get that price lower for the investor. There's nothing else available that he can buy, but there's not the sold comps to support where the price is. Just the availability of inventory supports that price. So we're seeing this appraisal issues in our new market. In Canyon County, again, that median price. Oh yeah, that median price is $323,000. And in new construction, it's almost $350,000 in Canyon County, with an almost 84% decrease in inventory year over year and 26 days on market. Now for existing homes, that days on market is still very low. The median price is $300,000. So at least it has some ring to reasonability to it, I suppose, unless we look into that and delve in deeper and find that it's all older properties. But why is it so crazy out there? Well, in-migration has not slowed in the face of COVID. In fact, it has amplified out-of-state purchases. The wildfires, the people were getting smoked out of California, literally. They were pulling their money from the stock market in some cases, or they had cash from equity in California homes and other states. But yes, a lot of California buyers. And so they're helping exasperate the laws of supply and demand that are in effect. That short supply is creating increasingly motivated buyers. And imagine if someone needs a home, that's a basic need. Some people just need to move into homes, not like investors. And so eventually they're going to start really boosting up what they're willing to offer a seller in order to get said home. And like I said before, the appraisals are not necessarily keeping up. And that's a stopgap measure that I don't like to rely on, since appraisals will look at the current contract and factor that into their appraisals. But again, if an appraisal is not keeping up, I'm going to help celebrate that with my client and use that as a leverage point whenever possible. The concern is some clients are not, if they have the cash to compensate for the lower appraisal, if they have the higher down payment, they may not care if they're overpaying by $5,000 if they just need a place to live. At some point, you don't want to miss out on yet another house over $5,000, and when you're trying to find a place to live. And so that's something that we're seeing. It's a conversation to have when we're handling this frenetic market. An investor can apply one line of thinking, but when you're actually searching for your home, you're going to apply another. And a lot of times we have to look at what else is in the offer besides for price, and setting a real ceiling, a numbers-based ceiling as you get started, so you don't get too emotionally tied in the wind. So a lack of emotional investment is good for us investors, but it might just mean we're not buying something we might otherwise be willing to buy, because someone's going to be possibly willing to pay a higher price. Releasing contingencies. An investor who's or a buyer, we're seeing people release appraisal contingencies sometimes. If I know that the market is going to bear the price, if I know it's a good price, it's actually something that I find myself coaching clients on. I say, I have no problem with it. I know whether something's pushing the limits on price or not, or at least it's my job to. And if we know we're right in there with price, well, I'd rather see an appraisal release than have you pay $10,000 more out of pocket to beat out the next offer. So that's one line of thought, sometimes applied. Others, just finding patience. handling this frenetic market might mean finding something to sell because there's someone there to buy it. And then just making sure that you understand what you're releasing if you do release an appraisal contingency, and that you're working together with your team to make sure you are doing what needs to be done to get a property in this market, or to let it go. Both are important. So Melissa's up next, but I forgot to take a breath and see if anybody had questions. So I will stop sharing my screen for a second and invite you to give feedback or questions. Nothing? All right. Well, in that case, Melissa Sharone is on deck to tell us about the rental market. And she is the president of First Rate Property Management. One of the things I like to tell people about First Rate is they actually do their drive-bys. Not all property management companies do that. And I've seen them, even when there's a property listed for sale, you'll see First Rate doing their drive-bys and their walkthroughs. And I think that's an important part of the process for us as asset managers. If our manager's not doing it, we should be doing it to keep an eye on our investment. Their website is boiserentals.com. She's also a member of NARPM, formerly the chapter president of the National Association of Residential Property Managers. We get a lot of data from NARPM. They tell us what's going on. And then she has her MPM, which is fancy initials that means something very important. I bet it has to do with management, magnificent property manager. Is that what that stands for?
Not quite, Stacy. Master property manager is what that's. Okay. Thank you. I am going to also share my screen. Okay. So Stacy touched on a few things about me, but I like people to understand that they know they're getting valuable knowledge from somebody who knows what they're talking about. So as she said, I do have my MPM and my RMP. They're designations from NARPM. It's an association I've been a part of for 7 years now. I serve as the president here at First Rate, been in the industry for 10 years. I currently serve as the regional vice president for NARPM, and I'm in my second year term. So that's on the national board of directors. I have a bachelor's degree from Boise State in communications. I serve on the advisory council for the Better Business Bureau. I'm married. I work with my husband, and we're still married, so that's a good sign. We have 3 kids, and I'm also an investor of a 25-unit complex. So Stacy asked me to kind of present the crazy COVID we've been through. The property management industry has changed dramatically. And I want to start out by saying, before we get into some data, it's really important that you have a property manager, or even as a self-landlord, that you stay up to date on a lot of these things. We're really here to help. I'm here to help, even though those of you either self-manage or have different managers. There's, as you, Stacy just told you, there's plenty to go around. There's plenty of properties to manage. But it's important that you stay up on some of this, because there are lots of laws and regulations and things changing that are going to get some people in some trouble if they don't continue to tap into their resources. So I hope to be a resource to you today. And there are a lot of things I'm willing to share. If you have questions, you're certainly willing to get a hold of me afterwards. So we'll start with the market. Market really strong, really still on the upward trend in all areas. Rents are up, vacancy is overall is low, and the demand is still higher than the supply. We have, as Stacy mentioned, tons of people moving here for a variety of reasons, just as we have investors trying to come here, but they're there. So this graph you're looking at is the NARPM vacancy. So the Southwest Idaho chapter of NARPM, which is compressed of a ton of property managers from all over the valley, turn in their vacancy rates. And this is a good snapshot of a long time. It appears on this that it's been a little bit higher than ever before at this time. And really in this last year, maybe Southwest Idaho NARPM companies have had a little bit higher vacancy, and that's for various reasons. And we'll get into that. Some people have different screening criteria. Some people are into these new builds that take a while to fill. And so that plays into that role a little bit, but overall vacancy has still been pretty low. Over the course of COVID, with people not being able to afford rentals and stuff. It Let me go, sorry, to the next slide. This has probably been the biggest jump in the last, I would say, we were talking about with a few of you early who got on early, the rents, they are continuing to rise. It's strong. I know we as a management company continue to increase rents. We did take some things into consideration with COVID and not trying to, really steal from those who are struggling during this time. But our market, there are a lot of properties out there that are significantly too low. And so we found that happy medium. Property managers also in this area have followed suit. So this is the multifamily rentals. The blue is Ada County and the red is Camden County. So a 1-bedroom on average rent, and you got to remember some of these are brand new builds, and so that's going to sway that average to a little bit higher end. But $1,000. So what those brand new builds do is that because they are higher priced, it gives you more room on a little bit older unit to raise to a higher rent that you thought you could never get, because there's people out there that can't afford those brand new builds, but they still want a nice place to live. And so you're able to get a higher rent on something that's maybe 5 to 10 years older. 2 bedrooms are not much higher. And we've seen a drastic difference in the 1-bedroom to the 2-bedroom increase. And I don't know that I have enough facts as to why, but a lot of the new build and or lack, we're finding a trend of not as many roommate situations. So they're going to want to come into a 1-bedroom over a 2-bedroom. But those rents are still high. The 3-bedroom multifamily sitting at $1,200, $1,300. Really good rent. In the 10 years I've been here, I think our 3 bedrooms over at Garverdale used to rent for like $800 or $900. So that's a big swing for those rents. And then this is the chart I have here with the single family rents also performing really well. Single family always starts to slow down this time of year just because of the weather and the cold. We did see not as quite as much of a dip in rents or in vacancy because kids are not really in school. They're doing mostly virtual. And so location isn't as much of a factor of being settled before kids start school. But still single families are a little bit slower this time of year, but rents are still really holding steady. Again, the blue line is Ada County and the red line is Camden County. And then to kind of give you a better picture, this is our vacancy graph from First Street. And what it shows is the blue line is the current, the gray line is a 3-year average. And I now have my accountant who does my metrics graphing for me, does a year to date. So it's kind of the average of all 3. And so it's really played out to show you that consistently for a year, we've been pretty steady. We always spike up in the summer. That's just how vacancy goes. That's when we have the most turnover. But we are at an all-time low for this year and have been for most of the months currently at 0.56. So for those of you who don't know much about First Street, we manage about 1,300 doors. And I think we have 4 or 5 total properties and right now to rent, and 2 of them aren't even either closed or vacant yet. Did I go? Oh, days on market. Okay, this is another one I really like to share. And it's important for people who don't practice this business model and or have a property manager that doesn't. It's something to consider. And it's a good statistic that I love to share with other investors. So this days on market graph is showing how many days a property actually sits out there. And our average, as you can see, has been about 15 pretty consistently. Spiked up a little bit last September, October. And some of the variables there, we have projects that owners want to rehab, so it takes a month to, fix up or whatever. So we count those days. But what this is telling an investor is that we have the property rented within 15 days of listing. And how we do it here at First Rate is we start advertising the minute they give notice, which is 30 days before they're under their lease or sooner. And we start advertising that property right away, and we have staff that show it. And so we have this property rented 15 days before the tenant even moves out. So your minimal vacancy time is only the 3 to 5 days that it takes us to turn over the property. There have been a drastic number of people looking to change to that model because they haven't started marketing or showing these properties until after they've been vacant. And with COVID hitting, they definitely haven't been inside. And so that is affecting their vacancy because they're not getting it going until that tenant has completely moved out. But things are not sitting. And this shows it when we have people come to us and say, I really need a rental, but I don't know. And it's like, okay, well, the average, they only sit on the market for about 15 days. So if you really like this house or this apartment, this is how long it's going to be available till you're gonna have to find something new. Interesting topic for sure. Sorry. Oh, it's going backwards. Okay, so advertising updates. I don't know how much of you know about this, and I'm still researching a lot of this, but Zillow is now charging for you to post your ads. It is blowing up nationwide. It's about $1.50 per day per listing. Our current metrics, since this has happened, we chose not to opt into this for the sake of the owners, have showed that Zillow really isn't affecting our average days on market. We are still being seen. People are still finding our rentals through other avenues and the other sites that we push to. The general property management population in this area is choosing to go without Zillow. And my prediction here is that when enough people don't use it, Zillow won't be a cool thing anymore. The only reason it became cool is because everybody hopped on, right? I do know there's some information out there about Zillow not pulling from the MLS anymore. I don't have enough, and I'm happy to research more just because I'm not a licensed agent, but I know it's a big talk in NARPM right now that people are stressed because they use the MLS and Zillow, together, and they're now charging for that as well. And so people are really feared that they won't see their rentals. But I'm going to go back to the theory of in this market, in this area, Zillow, I really will be surprised if they don't just fade out. But just to be aware, we have had some owners that are really set on Zillow and they wanted to pay for this. And so they did, but it didn't affect their rentability in any way, shape, or form so far. This is pretty new. And we haven't really had a chance to test it in the hot market. So spring, summer. Another advertising updates for you, for those of you who have rentals or have companies that run them or do them yourself. If you're not doing virtual tours, you need to start now. Just like if you're not using Zoom, you need to start now. It's the wave of the future. It's a way to get places rented. We started this about a year ago, and we have a very affordable software that we do it with the setup stuff. And we have lots of people. It literally walks you through the property. So you're able to see and guide yourself through. There's some that are super high tech that create a floor plan for you. And there's some that are more basic that get the job done. I know a lot of people also are really stressing on the importance of just taking a video on your phone. In the wave of COVID and the uncertainty of when it's going to go away, you've got to be able to market your property in the best that you can without putting yourself at risk or anybody else. It's been a huge game changer for us, and it's something that we plan to carry on forever. Along that line, pictures matter. They're more important now than they probably ever used to be. A lot of times it's a deciding factor for some people. Are they accurate? Are they up to date? Do they have the right angle, the right lighting, all those things? I know real estate agents pay really close attention to this because it's part of their job. But before it didn't matter because people wanted to see and get on and get in there. People aren't looking and showing as much anymore. So those things matter. And then again, I talk about this a lot when I'm presenting for advertising. Your online presence is crucial. So how are people finding you? Where's your SEO? If people were to search rentals in the Boise area, are they going to find your properties or your property management company? It's extremely important. You have to be seen online.
Melissa?
Yes.
Michelle has asked, what are you using instead of Zillow to market rentals now that Zillow is not the best resource?
So we still use our website, and our website pushes to over 100 random other sites. Our SEO is really strong. And so people find First Rate when they search for rentals. And a lot of times they go straight to our website. That's really the best option for people who have property management companies. You want to avoid scams and to make sure people are really getting the right advertisement, you want people to go to your website. But there's still the Trulia Facebook Marketplace is doing rentals. You can post on Zillow. It's just becoming not the thing. Really, there's not a metric there to say that it's worth $1.50 per day.
Mm-hmm. And then what about Craigslist as a free option with watermarked photos?
We still post on Craigslist. People laugh, but it works.
Mm-hmm.
Watermark your photos, put some precautions in there. We advise our tenants to go check, come talk to us before you respond to a Craigslist ad. Make sure we really have that property and you're paying us the money. I mean, you will, but you're finding scams everywhere. So there's protections you can put in place there, but there's tons of places that it's going to push. And I can send Stacy a list of all the ones our website pushes out to. Any more questions before I go on? No? Okay. Application updates. Companion animals, our favorite topic. They're on the rise. So it is what it is. There's not a lot we can do about it. It's still very good practice for you to verify the information. And I'm happy to send some more detailed info on this. I didn't know how much in detail we wanted to go. If you have a property management company, they should know what they're looking for. There are resources out there that you can use to help screen these. But the problem with these is becoming that there's a lot more telehealth going on. And so you're getting documentation from providers that are from different states, providers that have never seen this patient. And so the realm of it has really changed. Not that those aren't valid. You just need to be careful about the verifying process. It needs to state that they're a patient of theirs. You have a right for it to state that the patient has a disability. And you also have a right for it to ask, or for the letter needs to explain the nexus between the disability related need. So yes, they have a disability, but why do they need this animal? The fourth factor used to be, is it a provider? Can they verify? And, local, is this real? Well, that's becoming more of a challenge because telehealth is a big thing right now. And there's also a lot of people buying fake letters that are a certificate online. A certificate is not a verified document for a companion animal. So they're coming. Idaho's has the largest population of these. That hasn't changed. And I don't foresee it changing with COVID, especially with the mental health stuff that it has caused. Another thing I really want to caution people, with a record number of people on unemployment, really take time to evaluate your screening criteria. As a private landlord, you have a little bit more flexibility here. But if you have more than, I think it's 8, maybe it's 4 units, you have to function just like a company, or your company that you have hired to do this should be paying attention to this. Stable income is always best. You need to talk to your company, or question your screening criteria. Are you going to accept unemployment? It doesn't last forever. Is that really verifiable income in your procedures? Don't be scared to verify new employment. A lot of people changing jobs or having new employment. Don't be scared to pick up the phone and call. Is this person really employed? Are you a real company? The fakeness is out there. And really it's about setting your tenants up for success. Are you putting them into a home that they really can't afford? And does your criteria really set yourself up for that? An example of this would be, when you go buy a car, they go off your gross income. They don't factor in any bills you have, any taxes that get taken out. Here at First Rate, we go off of net income. Doesn't mean we go through a few more applicants before we find a qualified one, maybe. but we're setting them up for success, and we're also putting a very good qualified applicant into an owner's property, which is what you all are looking for. So a few things to kind of be cognitive of as that goes, or that evolves. Okay, topic of the day: evictions. I have a lot to go over here, and there might be questions, so just Stacy, interrupt me if people have questions, and I'm going to try to do the best to describe this in the most simplest terms. I by no means am an attorney. And there are plenty available resources that I can provide for you if you have need to go to people. So I'll start with Idaho. Idaho Legal Aid sued the state of Idaho for a statute that has existed since the beginning of time, that says technically every tenant has a right to a jury trial in an eviction. What this means is you get to an eviction, they say, I want a jury trial. You then go through the whole documentation process, discovery, that whole thing, and you go up to tell a jury the same thing that you would have told them in the first eviction hearing. They haven't paid rent. Nothing's changed in that 3-week period of time. As a landlord, you can still deny the rent if they haven't paid within that 3-day notice time that you've given them. It was a very interesting, I listened to the entire hearing. Didn't understand probably more than 50% of it because I am, again, not an attorney. But the state of Idaho and the judges were really torn. They understood where they were coming from with the statute, but not paying rent really isn't, there's nothing more to prove. They haven't paid rent. So they when the decision came, it was really a middle road. They kind of met in the middle and did some things in favor of Idaho Legal Aid, and also did some things in favor of how it is now. So basically, the summary of it is, if a tenant asks for a jury trial, it's really up to the judge to say to whether they're going to grant that or not. There are some things you can interject if your attorney understands how this ruling panned out. I know in our lease, we have a spot under governing, I don't even remember what the section's called, but it basically says landlord and tenant has waived right to a jury trial. We've always had it in there because of how the statutes read. So your attorney would be able to bring that up at that time. Or because you are basically not paying rent is not a jury worthy crime, I guess you would say, or whatever, conviction. There are some judges that would say you have enough proof, there's no point in going 3 weeks. So this is very new. It's, to my knowledge today, I don't think a tenant has asked for a jury trial that we know of for an eviction. There also has not been a lot of evictions happening for other reasons. So the advice that we've been given from our attorneys, and we use several different ones, as go about it as normal. But it is out there, and you do have to be prepared, because if there's a tenant out there that knows the system, they're going to figure out how to work it. And as I continue to get updates, I'll definitely keep Stacy in the loop. But for now, it doesn't seem to be a problem. Idaho Legal Aid is not educating the tenants, I think, like they thought they were going to, because the ruling was really pretty vague. Okay, we talked about lease updates. It's really too early to know the impact. Okay, CDC has the eviction ban. So there was the eviction moratorium that was part of the CARES Act that ended back in June or July, and we had to wait 30 days till we could send a 3-day notice. During that time frame, we did not deliver any 3-day notices, but rather a letter documenting that your rent was late or still not paid. So we had documentation. So it's important that as we go through some of these things, and I'm happy to share more of some things we did during this, that you still have documentation of things if they're on hold. That expired. The CDC, to whatever power they think they have, came out and said no more evictions to the end of the year. And that's all they said, and nobody really went beyond that. I don't know how many of you have really researched or studied this, but there is a form, and I have this link which I can send to Stacy, or I can send you guys this presentation. But if you just Google CDC eviction form, this will come up. It's called a declaration form. And what this is this is a form that a tenant has to fill out and sign. You do not have to tell them about it. You do not have to educate them on it. But as landlords, or if you have a property management company, if somebody turns in this form, you better not evict. There are huge consequences for this. So it's basically under oath saying, I wonder if it'll let me click on it. Oh, it will. Can you see it? No, you can?
No.
What are you looking
It's not going anywhere.
at? My slideshow?
Yeah.
Okay. It's like, it like paused it. So let me get out of it. Let me hang on. Sorry, Stacy. I wanted to show them this. I can't get out. Like, hang on.
I was thinking maybe I could try to pull it up and share my screen while you get yours back, but I don't
Oh,
know.
here we go. Can you see mine now?
It still shows the presentation.
Okay, good. I'm gonna go back there.
Okay.
I can send this to you guys, or like I said, if you Google the CDC form, it'll come up. It's basically a declaration. They're going under oath in essence saying that they've, because of a relation to COVID, a job loss, whatever, that they cannot pay rent and you cannot evict them. Doesn't mean you still can't try to collect. Doesn't mean you still can't file the eviction with your courts, and it's a state by state, but in Idaho you can. They just won't be evicted until this expires. It's set to expire 12/31. The extension at this time is really unknown. There are several lawsuits from several big companies. I know apartment association across the nation. There's several states that have filed a lawsuit against CDC, basically saying it's not within their power to put this out. I will tell you personally, I've evicted 4 people in the midst of COVID for different reasons, and I've had 0 issues so far. But I also follow the processes that you need to follow and have the proper documentation. Idaho's a little bit more lenient in that realm, but this is out there, and it's really unknown with the election results and how this is all going to pan out. But if someone turns in that form, you or your people have to know you can evict.
Melissa, question. When you've had to evict during COVID, has it been related to COVID at all? And did any of those evictees have a form?
Nope. I have not seen this form yet. I did 2 evictions early summer. I had 1 already pending right when COVID, like when we got our shelter in place order. It had nothing to do with COVID. Of course, it got played into that. But no forms so far. And then I just had to do another one completely unrelated to COVID. And it went pretty well, considering. So it's not that we're heartless and don't want to kick people out during this, but we also have an obligation to our clients and who also need to pay their bills. And like we were talking about earlier today, if you're not paying and you're getting behind, there's no ramification to catch up. So it's best that we find a different alternative. There is help out there. We still have a list provided on our website for companies and people that can be of resource to those tenants that do need help. And I'll talk a little bit more of that in a minute. All right, here. Late rent payments. So I will tell you 98% of our tenants still paid rent on time through this whole thing. Do I think it's because I think there's several factors. We were proactive. We had a plan. We communicated that plan with our tenants and with our owners. We were consistent. We followed the same plan for every single person that said they couldn't pay their rent. We have a form that we created, so it held them accountable. They also signed it, so it served as a promissory note in the event that when they didn't pay when they said they could, we had something to go back on. We asked for proof. So I put on here, don't be scared to ask for proof. Are you on unemployment? Do you have a letter that says you're laid off right now because your restaurant's closed? There's nothing wrong with them providing the proof to say that they're really having a hardship. And because we laid all these things out in the beginning, we didn't have a lot of tenants try to take advantage of it. We just didn't, because I think they knew they couldn't get through this. Whatever you do, don't use your deposit money, their deposit money, to pay rent. Big no. I guarantee in the lease it says not to do that. That's going to put yourself in a bad bind. And then my best advice is don't let them get more than 2 months behind. If they can't figure it out in 2 months, they're not going to figure it out. I'm happy to share my form too. I can send it to Stacy or you guys. I have my contact information. It's very simple, has the payment arrangement. We are starting to see a few more of these come in as it's gotten worse recently with, restaurants closing and losing, servers losing hours and things like that. We maybe had 10 or so people consistently for a couple months, and then those guys got it together, and maybe we had 3 or 4 more. But really through like July, August, September, we were really back to normal as far as late rent payments. I expect it to increase, and we'll go back to the same plan that we went to. So it's clear expectations and everyone knows what's expected of them. And then just a couple, did you know? Some trends I've been seeing in property management: tenants are home more, significantly more. So utilities are higher. So think about that as you are tenants responsible for utilities. Is it time to look at it? If it is a shared metered, is it time to look at something like RUBS or splitting those utility costs? The biggest increase we've seen is in multifamily with the trash dumpsters. Like we can't keep up because there's that much trash. So those are some things to consider, especially as you're doing a pro forma. Those maybe need to go up a little bit higher as we continue to be home more. Resources, you've got to have them. They're your best friend. I will tell you, I think following up with COVID and the eviction and all the laws and the having to manage staff and rentals and people and keep safe, it's been my full-time job. But I'm thankful that I have NARPM and other resources that have helped make it easy for me. And so I'm challenging you guys to find people that can provide you the resources you need to still be able to manage your own rentals and know what you're getting yourself into. And then one more thing is there's a massive shortage in the below. So supplies, whether it's maintenance supplies or anything you may need. Appliances has been our biggest one. We have contacted a few of our vendors and said we've needed fridges for our tenants. And they said we're 3 months out. Okay, a tenant can't go 3 months without a fridge. That's crazy, right? So you got to get resourceful. You got to find those fridges. We now have several in our garage here at work. And we have become a short-term appliance delivery company. But that's what it takes. That's what it takes to take care of your tenant. You're not going to pay an astronomical amount and then your owner be unhappy. So we're doing the best we can in that realm, but there is a shortage. So just forewarned. And then PPE, which is protective equipment for those of you that are in and out of things, doing what you can to either protect yourself, your staff, or whatever. Okay. And that is all I have as far as a brief overview of PM updates. It's changing daily. But really the moral of all of this big picture we found is that we've remained consistent with our policies and procedures, and not a lot has veered from that. And that really has been a saving grace for us, at least during this. Because, there's a lot of people out there that are like myself, trying to homeschool kids and run a company and take care of 20 employees. So it's pretty crazy. Does anyone have any questions about what I went over?
Melissa, you mentioned the term RUBS, and I know we usually get some questions about that when you were talking about utilities going up in the face of everyone being home for the pandemic.
Do you want me to go over that more?
Please.
So we have a couple properties we do this on, and it's because a couple different reasons. Some owners have requested it, and then we had one we actually took over that had it already in place. And it's basically, it's really big in California, for those of you who don't know. Racial utility billing or something along that lines is what it's
Ratio.
ratio. Yeah.
Utility billing service, something, or splits.
Yeah. Ratio. Yeah. I don't know the exact term, something like that. But we basically take the entire bill and we have a Excel spreadsheet, which is a formula that we got. And you divide it by, there's factors of number of people living in there, number of bedrooms, and so on. So it's really a way to pass on the cost to the tenant. Owner still pays the bill, and we just bill the tenant so we get the bill in, owner pays it. We then send a statement to the tenant and they pay that with their rent. It's gone really well, for the couple properties that we do it for. I'm really shocked it's not here in Idaho yet, to be honest. And maybe more things are going separately metered. Maybe Stacy, you have better insight on that. But for those that have the bigger meters, I'm surprised more owners haven't tapped into this.
Yeah, and Rick is saying that some companies are using a flat rate rubs, and that's, I think one of my North End properties has that, which is where you just charge them $50 a month and say this goes toward water or heat or something, depending on what it is.
Yep, and the only thing I'll tell you I love that idea, but be cautious. We've had a situation where a company we took over for was charging an astronomical amount of a flat rate, and there were not bills to cover that flat rate. And essentially that's fraud. So be careful about, if you're charging that flat rate, that it really is pretty close to what your bills are, or throw something else in there, whether it's an admin fee or a drive-by or whatever you guys do. In my example, the bills were about 60 a month and they were charging 150. You have to provide that documentation, and if a tenant asks for it, you have to provide that. So it's got to be relatively close to what it's costing.
That
I
makes
had
Okay.
a question as well.
Go ahead, Adam.
In regards to evictions, if you are inheriting a tenant when you're purchasing a property, how it has that changed, or has it changed at all with regards to COVID stuff?
And evictions? Like,
Well,
if I inherit
yeah, I'm thinking about you inherit a problem tenant and either they're on a month to month or things like that. I mean, termination of a lease, when the lease just ends, I believe you can still just give 30 days notice, correct? And they just have 30 days to vacate.
Yep. So during the CARES Act, you couldn't even give people notice. So that was the other thing that expired. You couldn't even tell them to move out.
Okay.
That has been expired. We're clear of that. My best advice to you is, if they're month to month, to get them on your own lease as quick as you can. If they have a legal binding contract with a previous company or a previous manager, you have to honor that contract until it's expired. So you've got to follow those rules that are in that contract. If they're month to month, get them to sign onto your lease and make them follow your rules. And if they don't, then that's when you evict or give them notice to get out. But you could give them notice to get out if their lease permitted it.
Okay. That's
Yep.
kind of what I'm.
Mhm.
What I was asking.
Good question.
And part of the due diligence, Adam, is, during the inspection contingency on the property, if it's not an as-is purchase, if it's an on-market, if it's not a screaming deal type of property, then through the due diligence, a lot of times you can get a seller to address this. One strategy for that would be, if they're behind on their rent already and you know it, simply to have the owner, that be the owner's hit, not yours. And so if you close on the 5th of the month, you're still going to get credit for 25 days rent, even though that person hasn't paid. And so negotiating that into the contract. So then you've got 25 days of rent there. And the other thing you could do, depending on the situation, is have the owner issue the 30 days notice. You can't issue 30 days notice on a property that you don't own, but you can ask the current landlord to issue that notice to start that 30-day countdown clock, so you're not out of pocket money.
Correct. Yeah.
We also had an issue recently, Tony Drost had an issue where somebody shut off their utilities prior to contract, and it was unexpected. Well, we needed heat. Oh yeah, Melissa, first rate, you were a part of this, trying to get these utilities on last second because it happened to be during a cold spell, and we don't want the house to go unheated with water in the pipes. And the tenants moved out. We knew they'd move out at some point. We never knew exactly when. And the landlord went ahead and or the tenant said, I don't know, we just didn't have heat. So we had to deal with that. And so we have a new clause, canned verbiage to put into contracts as needed to make sure the sellers understand that they're meant to keep the heat on until closing.
Stacy, and the rest of you, I put my email in the chat box. So if you guys have questions, you're welcome to reach out to me. If you want me to help you or share the forms that I talked about, I'm more than willing to share those with you guys as well.
Melissa, one final question. Will you have a summary and outline of this presentation available?
Yeah, I can send it.
Will you send me the PowerPoint, Melissa?
Yeah, I will.
Share it? Okay.
Good, thank you.
Let's
Great
do
presentation.
Thank you.
Should we wrap it up with a summary, Melissa?
Sure.
I'll start it. Okay. Let's see. What have we covered today? Well, owning and investing in real estate in the face of a global pandemic creates a lot of new scenarios, and it forces us in a position of reactivity in some cases, but there's always an opportunity to be proactive in others. So when it comes to purchases and sales and acquisitions and strategy on how long to hold or when to sell, applying the current climate of the marketplace to your decision and where you are in the investor cycle are two real strong strategies. When it comes to maintaining and managing your property that you already own through your property manager as asset manager or through a property manager like Melissa, summarize some of the key points, Melissa, from your presentation.
Okay, so market's still strong. Don't be scared. COVID really hasn't drastically changed anything in that area. In fact, it's probably helped some because people are leaving and coming here. So I loved the optimistic approach that most people chose on their poll when they entered, because I would agree that we're headed still in a really, really strong market with high rents and low vacancy to continue. Evictions, be careful. You got to know, really, it's about your resources. You have to know the changing laws. You have to keep up on legislation. All this stuff is public knowledge. You just have to devote the time to make sure you know what is changing that's going to affect you in your rentals. And then some random little things, evaluate your screening criteria, be consistent with whatever decisions you do make. Keep them the same for everybody, and stock up on fridges and dishwashers.
I have a couple used fridges in my garage from some previous landlord hoarding problems. If anyone needs an older fridge for cheap, I'd be happy to let it go, but it's not that pretty. It's not that ugly either though, folks, and the price is right. Also, I heard Melissa say that the face of marketing is changing. We're being very careful when we enter tenants' homes, and using PPE when we do, if we have to enter space, and giving them ample, with the notice of entry, reassurance that those processes are going to be adhered to so they feel comfortable. But also the face of marketing doesn't include as many accesses as it used to. When you have folks coming in from out of state, they're shopping online anyway. So even a casual cell phone video walking tour, even if we're not professional videographers, I find that helps in all sorts of situations, whether it's purchase and sales of rentals or of occupied units or of marketing units for rent. Craigslist is still a thing, but remember to watermark your photos if you know how and if you can, because your ad may get hijacked. And I also liked what Melissa said about including in your ad that the text that says, we will respond to phone calls and emails, or something in the text in case they copy your ad verbatim, or in case someone's, just to encourage tenants to remember that don't just wire money to somebody you haven't spoken with or vetted. Facebook Marketplace, Trulia, Craigslist, video tours, And I also liked it that you have a resource available, Melissa, for the components we can use to screen a companion letter if we want to make sure it's a legitimate companion letter. To understand that when we do receive a companion pet, this is always, or a CDC form to stave off eviction, that there is a set of procedures that needs to kick in place, that we're in a area of hot regulations. So tread carefully, especially if you're an owner of 4 units or more, because you are treated like a business and not treated like someone who just happens to rent the other half of their duplex. They get a little more of a hall pass than we do. And remembering to, if you have someone with a hardship, request, have a process for them to request payment arrangements. And the other tip that we said at the very beginning through the Idaho Apartment Association, I'm on the board of that, they were talking about not using the word deferring, even though that's what payment arrangements are. People don't really resonate with that word. They don't know what it means, but everyone knows what payment arrangements mean. And so that way people do understand that this is just delaying the inevitable rent that must come. And for those of you interested in the results of the poll, 6 of us of 8 respondents, 6 were optimistic or are optimistic in their outlook on the economy, and 2 are neutral. We don't have any pessimism out there. So thanks for sharing, you guys.
Thank you.
Thanks, Stacy and Melissa.
Have a great evening. Good to see you all.
You too. Thank you, ladies.
Thank you.
Bye-bye.
And Melissa, how do I end the meeting? All right. Well, thank you, Melissa, for everything. You did a great job. Everyone left. I don't have to end the meeting except for Shaner.